Hello and welcome back to Dukascopy TV. Bruno Estier is back in the studio with us. Together we will be looking at how the markets are performing from a technical point of view. Bruno, welcome back.
Good morning, Monica.
Nice to see you again, Bruno. Now, last week was quite volatile in the equity markets. Does it change the bull scenario which we were looking at?
Well, what happened last week is important, and we need to give some consideration to it. Especially, we need to understand what was probably triggering the whole fear scenario. First of all, we had last week and the week before a break in copper, and copper broke below 310 and accelerated down. Interesting to notice is that copper is usually a leading indicator of growth potential, especially in China. And at the same time, we look at the upper panel. In orange, we have the value of the yuan, the Chinese yuan, and in red, the yen. So we notice that while the copper accelerated down, at the same time, the Chinese yuan was also moving down, which is quite of a surprise because in the last 2 years, the yuan has been appreciating gradually, but always on the way up. And therefore, it is explaining why basically there was a combination between copper and yuan appreciation, which allowed a sort of carry trade and probably too much speculative activity, which is cooled down by the Chinese authorities. So what we assist now is an unwinding of that. So if the Chinese yuan is getting weaker, it makes competition for the yen. And yen, as we see, has been rising a little bit during last week.
Okay. And what about any particular impact on the Nikkei? Do we see anything there?
Of course, you're right. The yen, usually when the yen was depreciating, that was helpful for exporting industry, and we saw the Nikkei moving up. And that's what happened last year. Now, since the beginning of this year, the yen is not depreciating anymore. It's even rising in value a little bit, and the relative strength of the Nikkei versus the S&P has been moving down. And we see also that we are very far from the top of the beginning of the year. And we also, last week, made a so-called bearish signal with a bearish engulfing pattern. This black candle here compared to the white one is totally covered by this one. And therefore, given the setup of weak relative strengths and rising yen, we hope that the cloud, which is here below, around 13,000, will be able to give some support to the market.
Okay. And what if we were to go above that, even beyond the 1400?
If we have the chance not to rebound quickly, okay, when we looked at the daily charts, we have a setup which is a little bit more bearish, in the sense that we had a first move down and then a corrective move up during February, where we have been discussing that the last 2 weeks. Now, if we look at this pattern, this is called a bear flag. So we broke below it, and in theory, if it breaks 13,000, then what it does, it has a target. If it breaks 14,000, sorry, it has a target toward 13,000. And that would not be too good news.
Okay. And what about the situation with European equity, Bruno? What can you tell us about that?
Well, European equity have been moving from the top of the range to the bottom of the range. So it is a triangle, so it is neutral. However, there is a little gap here at 3090, which is overhead supply. So as long as this is unfilled, that will means that there remains a bearish bias for the market on Europe. And that has been tied to what happened in Ukraine also.
And what is the case? Can the same be said for the US?
Well, the US is much less dramatic because we see we are more near the top side of the chart. Of course, we moved back below this 1850 level, which is really important. But we are just trying to be above or below. The thing is that if we do not sustain the rise that we just had yesterday, then this new high at 1883 is going to be mentioned as a failure. and a failure to make a new high and then moving back below the key levels, which was 1850, is a bearish sign. In addition, on the weekly charts here, we see that we have also a bearish engulfing pattern, which is no good news.
Okay. And what would be the next sort of key support that we could look out for?
If it's worsen, of course, then the next key support is this long-term, wonderful moving average we represent 200 days or 40 weeks, and currently it is around 1750. And the nice thing is that that average is above the previous low, so it's kind of a double support between 1340 and 1350. And therefore, all is not black, because when we looked very long term on the monthly charts, of course, we still have a rising moving average, and we see that around this moving average we have the Bollinger Bands. We have the first standard deviation Bollinger Band, the green line here, and the upper one in red. And the green one is at 1775. So as long as prices are between 1775 and 1920, we can say that the longer term, the bull case remains okay.
Sounds good. Well, thank you so much once again, Bruno, for coming in and explaining everything for us. Great to see you again. Thank you.
You're welcome.
Okay, well that's all from Bruno and myself for another episode, but make sure you keep clicking back to Dukascopy TV. Goodbye for now.